in order. Thomas is another new papa, number 3.
Thank you. Yes,
Congrats.
little baby girl arrived on Saturday. Very, very happy, healthy mom and baby are doing well, and gave me an opportunity to watch some Georgia Southern football on Saturday morning, which I always love to do.
It was a good game. It was a great game. Can't say we love the outcome, but it was a good game. So hope you all had a great weekend. And again, we are broadcasting every Tuesday. So mark that little thing called your phone for 12 noon Pacific to go live on broadcasts. And between now and the end of the year, it's absolutely critical. Critical. 2 weeks ago, we started what we call our financial infrastructure, which really is a pace down to the end of the year. And there's a couple things, especially that have to do with, I'm going to say, government agencies and their shutdown that is causing a lot of backup. So originally, I just talked about the financial infrastructure, what it is. We'll be putting together some more like definitive handouts and guides and sequences for what you really need to get done and a checklist. And then last week we talked about taxes and your need to get your tax structure done. September 15th was the first tax period. October 15th coming in hot, like really soon. 16 days is when you wrap up 2019. So if you've missed those two, Thomas, maybe you can put a link out into the Millionaires in Training where those recordings are. And this is a series that we're doing. And today is critical. So this is about your entities, your entity structure, your entity planning. And again, another word for entities is getting incorporated. If you would like to have all of these deductions and to be treated as a legal entity and business, you need to be incorporated. And Scott, one of the things, Scott's been around for years with us. And we will be talking more for those of you in the big table. He'll be on the laser call again today. This is so important. What Weldon and I said, and I kind of made it up the week before, so you can add in yours now. We're going to kind of keep building on this. Is we're saying like by probably mid-November, it's probably over. Like if you wanted an entity and you want to get in that line, I mean, some of the states are really backed up. So let's talk about just the most critical, things they have to get now. And why they need to get incorporated. Because wouldn't you agree? I mean, we'll have Joe on next week to talk about qualified plans. Same thing. You got another government agency, and a lot of these agencies have been shut down. They're really, really, really backed up. I know just the passport office is 5 to 6 months back.
Yeah.
So
I mean, even for obtaining ITINs is now 11 to 12 weeks out. It's like, yikes. It's everything is seriously backed up, and a lot of the states are backed up, and and the closer that we get to the end of the year, the more they're going to be backed up, because everybody is going to be choosing to, we got to pull the trigger now, right now. And let's start planning now so that we can bypass that huge influx of filings and submissions and just get it in place the way we need it.
Yeah. And so another one I just thought of, so as you are booking your calendar, like I said, please put this in your phone, make this really serious, and say next week, 12 noon, Joe and qualified plans. After that will be trust and wills. Scott, I'll have you back with Jason then, so that'll be a couple weeks out. In fact, we will actually be at the big table when we broadcast that. You, Jason, and I will be live from Kansas City, Missouri, or Kansas City, Kansas. Where are we, Thomas?
Kansas City, Missouri.
Kansas City, Missouri.
All right.
I booked my flight in my room yesterday.
So we will be broadcasting live from there next week, though. Will be your qualified plans. And what's so critical about your financial infrastructure, if you want to really live the lifestyle that we talk about, living corporate life, act, think, make money the way the wealthy do, all these structures are critical. So Scott, I'm just going to kind of let you take it away, a little free form. I mean, kind of back up to those that are new. We've got a lot of new people every day. We're getting, 40, 50 more people joining. So, what is a company? Just kind of go through it from an overview. And I guess we are talking US centric, even though Scott can help you with Canadian companies, and we have the same Scott kind of a resource in other countries. So regardless of him speaking in US terms and vernacular today, in principle, this is a worldwide thing. And in principle, you got to tax your income and in hot, like end of the year. And by the way, November will just kind of be taken care of in the chaos of the United States presidential election, which the world's watching. So I would just get it done. And I know, you always say, well, I'll put it on my checklist. No, do it now. So Scott, talk about why we need it, what they are, And how do they contact you? Maybe we have a Calendly link or something so they can get in line to get an appointment.
Yeah, definitely. Definitely. So, tax planning, everybody always thinks it's right at the end of the year. And really, tax planning should be happening throughout the course of the year. So here we are coming up, right at the very beginning of the fourth quarter. That's going to give us some additional time to take advantage of perks, benefits, deductions, be able to make contributions to, as you talked about, Laurel. Joe will be coming on to, to talk about retirement accounts. But, the only way that we can, in fact, make those types of contributions to the different types of retirement accounts is if we have an entity structure in place. You can't just do that as a sole proprietor. You're really missing out on a lot of deductions. And so us having about one full quarter to be able to earn income as we have, but then start looking back to take advantage of what are called pre-incorporation costs of, educational expenses, setting up the company, getting things in order. It's critical right now. That's really the biggest thing. Man, I could talk about this for a long time, but really, like I said, getting things in order, not waiting until the end of the year. Here's one of the bigger things. If you wait until the end of the year and you try and dump everything onto your accountant right then and there, you're going to have a huge bill for the preparation of those taxes. So getting it done now is crucial, and being able to, especially if you've got multiple different types of businesses. Let's say you're in real estate and you've got, some other alternative investments, or maybe you're doing some coaching. Each one of those, the companies can actually work together. And having the companies work together, we can kind of shift some of the tax liability that you may be incurring as a sole proprietor, just a single member entity, if you will. So, that's crucial. And having that time frame to create the invoicing scenario, to be able to move the cash, not in the 11th hour, 59th minute, but right now, it makes the most sense.
So talk through some of the entities. One of the biggest questions, and those of you out in the chat, thank you, Bruce. Scott said you got him 2 LLCs just set up. Those of you that are out in the chat, do you have any entities? We don't need to know exactly, actually tell us. Do you have an LLC? Do you have an S? Do you have a C in Canada? Do you have a numbered company, corporation? If you're in other parts of the world, what do you got? Let's start there so we can kind of talk through what's out there. And while that happens, Scott, talk about the difference between the 3 flow-throughs, right? The partnerships, the LLCs, and the S. Talk through the flow-through and what that means distinctively different than a C Corp. And again, in principle, this is the same thing around the world.
Right. Yeah. So you have, let's start out with the LLC. So the LLC with a single member is going to be considered, like you said, a pass-through entity, meaning the end of the year is December 31st, whatever money is left over will distribute down to your personal return, whether that's a profit or a loss. So that is, again, like I said, treated as a sole proprietor or single member disregarded entity. Then there's the partnership side of things. So again, an LLC having more than one owner, meaning 2 individuals or 2 companies. As the company makes money, there's the expenses, the deductions, and again, whatever's left over as net will then be distributed based upon percentage of ownership or based upon pro rata share, depending upon how those members or partners want to distribute those profits or losses. So that's the partnership side, which means that on both of those, that's going to flow down through a K-1 to the personal returns or to those partners' companies' returns. Does that kind of explain it enough, or should I go into more detail?
What do you think, Thomas? I'd say a little more detail. And I think, and I know we're not giving advice, we're not giving tax advice, but a lot of you who have a business and a cash machine, the only way that you can take all these deductions that Weldon talked about last week is you have to be incorporated. So typically your active business that Scott's talking about is inside an S or an LLC. Right. So maybe talk from that detail, those kind of uses versus real estate. is sometimes an LLC, and then maybe talk about that C Corp, which is the big one.
Right. Okay. All right. So yeah, with an active business, active income is subject to self-employment tax. And so
Yep.
ultimately, if we're treated as a sole proprietor or disregarded entity, you're going to be paying taxes on what you drew out, and then whatever the distributed amount is will also be subject to that self-employment tax because it is showing up on the personal return. Now, there are ways of being able to structure it, as you had mentioned. So let's say, for instance, let's just use real numbers here. Let's say, for instance, the company has $100,000 left over in it at the end of the year. What's going to happen is that $100,000 is going to pass through to you personally in combination with whatever income you generated throughout the course of the year individually. Now, the problem here is that that's going to fall under your graduated bracket. So going back to that old saying of the more money you make, the more money they take, right? Yeah. So, if you're making 100,000 plus, as a married couple, or 150,000 roughly thereabouts combined, you're going to be upward of a 32% federal tax bracket, in addition to what you're going to have to pay your state. Now, if you live in states like California, high tax states like New York, that have a 9.5% to 12.5% state income tax, combining all of that income, I mean, we're talking 50, potentially 55% of the revenue that you've received to be taxed by the federal government, right? So, there's other ways of being able to structure the business, still keeping it a pass through, but allowing for additional deductions based upon the distribution. So in the case of the LLC single member, $100,000 would pass through to me. Let's say Laurel and I are in a business as an LLC, and we have it based, we have the revenue split based upon percentage of ownership. So let's say it's 50-50. We either can take that money on our personal returns, or we can have other entities own our membership interests, in which those $50,000 distributions can go into another company, allowing for an additional set of expenses, deductions, before in fact paying the taxes on it. Okay. Now, then that takes us into the S-elected entity for an active business. Yep. Again, active income is subject to self-employment tax. So on an S-elected company, if you draw a salary, a small salary like we always talk about, right, just enough to cover food, clothing, shelter, and personal entertainment, that's where you're going to be paying into the self-employment tax. Now, based upon an S-elected, whatever's left over at the end of the year will distribute as passive income, not subject to self-employment tax, which means that distributed amount has an increase of your profitability by 15.3%. Now, the cool thing that the IRS has put into place, it's almost another income bucket, if you will, what's classified as QBI, or qualified business income. Based upon the distribution from an S corporation and being able to take advantage of that qualified business income deduction, that's 20% deduction on that QBI. So that $100,000 that would normally distribute, take $20,000 off of that. I'm not going to pay taxes on that portion, and I've now paid taxes on the $80,000. So is that more of a detailed explanation?
Except when you don't have to pay taxes on the 80 if you have massive deductions, home office,
correct,
your computer, your intellectual property. Like, that's why we want you to get them set now. So then, right, like, the next thing is getting to the bank accounts, getting corporate credit. Like many of you have heard that from Deb and Eileen. How do you get corporate credit so you have access to more cash? And then, right, to really spend between now and the end of the year, getting the deductions done. So a lot of you're waiting way too long. It's like, well, I promise you, we'll have clients call Scott on Christmas Eve, right? I want to get it done. And it's like, it's not that it is too late. It is too late. It's
the 11th hour, 59th minute. There's no way of going. I mean, there is, but it becomes very cumbersome. So, take advantage of the deductions now, upward of 233 to 305 different corporate write-offs, which basically means you get more use of your money up front, which results in a lot less tax liability on the back end. So a lot of people who like to vacation or travel at this time, instead of vacations, it's a business trip. That's what I'm saying. People who like to vacation at this point in time, we're not going to vacation through the rest of the year. We're going to take business trips through the rest of the year. And you can only do that as an incorporated structure. Also helping with, writing off home office expenses, vehicle lease, vehicle reimbursement. These are all huge. These are ways of being able to use more of that money, and through the taxes, it eventually gets wiped out, but it becomes a tax deduction to the company itself.
Yep. And so
Okay.
I think a lot of you, I don't know, do you have a Calendly link that I think we had, maybe behind the scenes, Thomas, if you want to get
it here. Yep.
Scott's Calendly link. So right now, I mean, just the call to action, the request is set up an appointment, even if you think you're done. Now, some of you like Bruce, I think you're really fresh. You are done. Christopher, I'd get in there. Someone else up there said they think they needed another LLC. Then I want to comment. So Marilyn Renner, so you don't use your sole proprietor for the purposes of borrowing from yourself. You need to be using that as a company. So you are connected directly to me. Make sure you text me and let's talk about how you do that. Because once you are set up, you actually start using the companies, your C Corp, your S Corp, your LLC as the bank. So all the money then becomes a company to company loan versus to you personally. It gets a little messier when you're doing that. Now, if it's 401k money, that's a whole nother conversation. So if you're in the big table, head of the table, some version of coaching, where and you have my cell phone text, because it's like, especially you shouldn't be doing it like that. You're on the right sequence. It's just a little bit off. Debbie, I'm not sure if you've talked to Scott lately. You need to speak to Rob. Rob says, is it 100K per LLC? And I think that's a huge I don't think it is. It's just bad advice at a lot of accountants. So it's not necessarily about the income per, right? Because a lot of people have companies making millions of dollars in one entity. It's the amount of deductions you can take. But when you're speaking about, say, real estate, it's more like $1 million per entity. But again, if you have partners, like if Thomas and I own something, he and I, or what we own isn't going to be in any of the same entities of what, say, Scott and I would own. So a lot of times you'll hear people have more and more entities. And a lot of times it's because of the associated partners. Not like Scott and I are in the black hole, right? And there's a couple companies that actually own our ownership. So my company owns mine, his company owns his, and then our company owns the black hole. So like just in that structure, then you got Damon. So I mean, just in our structure, we're probably, if you think about the investors as well, Scott, what do you think? 10, 15 entities?
15 entities that are the combination owners of two entities that then invested into one entity. Yes.
It's more about the partnership, which create liability, right?
Right.
Like, what Thomas and I do has nothing to do with what Scott and I do. So me using the same entity with both those partners, somebody should throw up a red flag, because essentially I'm the same common denominator. So a lot of you don't.
It's the same with.
Go ahead.
Sorry, sorry, didn't mean to cut you off, but it's the same with, people utilizing one entity for multiple different business ventures, right? And we're talking like real estate and consulting, and all of that is in one entity. And so liability that arises from a rental property can then affect all the divisions that you have in that one respective entity. So when we talk about separation of liability, what you and I do, Laurel, is totally different than what you and Thomas do. So we have to look at it in that capacity, a risk assessment, and say, do we put safe assets here, high risk assets here, your active business here, and do we have the intellectual property and all these things combined? So there, it's not a one size fits all, but we have to look at your overall scenario to evaluate what or how many entities are necessary.
Well, and
each one of those entities gets its own set of deductions. Yeah. So that's the bigger aspect.
And yes, it does get 15 different tax returns. Yeah. So because each person has its own different entity, and each person has their own deduction. So for example, we'll just use the black hole, right? Because we started talking about that. And then I'll go back to Thomas and I own real estate. We don't yet, but who knows, someday we might. So, but I want to talk about expenses inside, because a lot of you don't realize how partnerships work. Like right now in the black hole, we don't pay unless it's an agreed corporate trip to go to Vegas, which by the way, I'm killing it in Vegas. We're going to have to do more parties down there. I mean, people are just, even though you can't go to the stadium, they're rallying right around like where our office is. We need to have like a big happy hour in our office right next to the stadium. My point is, if we didn't as a company agree to go down to a big tailgate party or put on a party in Vegas and I just wanted to go, I could just go, but I can't bill that company as a deduction. I could bill a different company of mine because I may go for another reason, but you collectively have to agree on expenses. Then you get to the next problem of how do you all fly? Some people fly private, some people fly first class, some people don't want to fly, some people want to drive. So, I mean, all these things, which I don't think enough people talk about, Scott, when you get to an operating agreement, it's a really, really big deal about how you want to. I mean, it's one of the first things I look at as investors, how are the funds going to be used? Because what I see really immature entrepreneurs do is they expense the hell out of a joint LLC when they should be using those expenses yourself. So part of the reason that we're in this conversation, just so you're understanding, isn't for confusion. It's for some level of, I'm going to say, speaking to the comprehensive nature of it. It drives me crazy when somebody just says, or they'll email in, ask Laurel or whatever. I mean, Thomas probably gets it on so to Steve, they probably both get them on fast cash calls as well. Should I just be an LLC or an S? I don't know. I mean, the conversation is so much bigger, and I'm glad Jason's on because you'll be hearing from him around wills and trusts. It depends. And I know you all hate to hear it depends, but here's what it depends on. It depends. Are you married? Are you not married? Do you have a blended family? Do you have kids? Do you want a will and trust? I mean, or will and trust, do you want to do legacy work? If something happens to one partner, how does that get handled? How is it in the rest of the scope of what you're doing? So there is some comprehensive nature to all of the questions. And unlike other places like LegalZoom and some of these where you can just go $99 online entity, this isn't a fast check just to get it done. It's get it done right, get the paperwork done right. And probably the urgency now is get it done with the right entity with Scott. So then when we go to a will and trust with Jason, then we can layer that. And then you have enough time to look back at 2020 and say, what was a deduction? So even though like from now on, it clearly is deductions, you can look back and say, well, you know, I did go to Boise. And even though I wasn't incorporated, you know, it was an educational reimbursement that you can assign forward. And I know Weldon's very generous about assigning back in the 1 year for research and development, right? Yep. So anything that you might have done with us, you might have done some marketing stuff with somebody else. You might have just done some research, writing your book. Some of you signed up for Raymond Aaron's or you're working with us to write a book. That's all deductible. Right? That's just a big marketing brochure. So we want it done now. So you have between now and the end of the year to really thoroughly look at what deductions you should be taking and how do you move them forward. You wait till the end of the year. I mean, just everyone's momentum is into 2021 and your planning should be headed to 2021 soon. And just get some of this stuff checked off. Yep. Right? Few other, yes. So Linda, it depends on the kind of R&D, but absolutely. For those of you who have been standing around, say, for example, looking at real estate, but you've been doing different real estate, whether it's workshops, coaching with us, whatever you've done, that can be. Let's see, there was one question that caught my eye just a minute ago. Oh, so Marilyn says 401k money. So that's fine if you're 401k, but don't use your entity money. The biggest mistake some of you make is that you make money and because you don't have a company, it goes to your personal account and then you're using your personal money to go do investments. Once you start getting incorporated, if you pull that money out and take it personally, it's now taxed money. So we want you to go from the company to another company as a bank instead of that. And then Jason's going to share some more ways to be a bank through insurance. So it's a variety of ways. That's why we say it's integrated and it's more comprehensive. It's not just to check the boxes quickly, it check them smartly. And again, is there a Calendly link? Did I not see that go up?
So we put the askloral.com/entity link up. It gives you an opportunity to sign up for an opportunity to talk to Scott, book a time with him, and have that conversation about the entity strategies you're going to be having. I know, Scott, you and I talked about today, people understand that Sometimes they need more than one entity, right? There's multiple entities that they need with certain projects. So it's very important to understand that before you form those entities, having an understanding of how many you will need and then setting them up accordingly to be protected and smart moving forward.
Correct.
Yep. All right. So once they get incorporated, anything else? I mean, I guess they're just going to go see you, have a conversation. Let's do this, Scott, for preparation for the meeting with you. What are some things they need to come prepared with? So they can
yeah, I mean, that's a great question. So typically what I ask for is, okay, so the way that I like to do it is, tell me a little bit about what you're doing. So that way I can get a full understanding of everything, because as we go through the conversation, more and more information comes out. You've experienced it too. What else are you doing, right? Oh, I forgot about that. Anyway, so it's more, tell me a little bit about what you're doing, what kind of entities that you already have in place. What I also like to look at is who formed them for you. Did you go to, like you said, LegalZoom? Did you have an attorney help you, or did you just go file it yourself? Because that kind of helps me determine where we're at in building that baseline. Do we have an operating agreement? Do we have proper articles of organization or incorporation? Tax ID number, all these things. So those are a lot of the things that I'm looking for. But then having an understanding of what you're planning on doing moving forward. What does this look like in a year from now, in 3 years from now, in 5 years from now? Because that'll give me a better understanding of how to position the businesses. In addition to, do we already have any type of trusts in place? Because if we do, are the entities in fact tied into the trust, or are they just kind of hanging out there in the, in the waning? So it's, those are the things that I'm looking at. Is, like I said, is what kind of entities, what are you doing, who formed them for you, how long ago did you form them, and the trust aspects, and what are you looking at doing moving forward?
Okay. What else? Anything else they need to know? I'd say just go to the link, get signed up. And from there, then we start this a whole nother conversation and education about how to use it. How do you do the deductions? How do you make sure we really capture 2020? 2020 should be a massive write-off year for so many people, just because of the volatility, the loss. The loss of business, loss of income, a lot of that. So it just should be a massive, great deduction period in year based within, let's look at 2021 and 22 as being huge growth years. And then that blend of a 3-year return will be perfectly done well. So it's very, very strategically planned. Make sure that you get an appointment with Scott. Those of you in the big table, we will be back on with a little more detail talking about that in the laser call at 4:00 today is our big table laser call. And I think that's good for this minute. You guys good?
Awesome. Well, thanks for having
me
on.
Scott, thank you for hopping on the call today. Again, you go to askloral.com/entity to set up that time, have a conversation with Scott, and get yourself set up on the right track. Also have another special guest today. I want to go ahead and invite her to come on screen. Marlene was one of our top 3 finishers from our recent virtual meetup and marketplace event. Marlene finished second with $3,200 worth of sales.
Yep.
They were unable to join us today. Dr. Renee and Jim Connolly from CEO Chef sold over $7,500 worth of goods at the virtual meetup and marketplace. As lastly, Sarah Bazan finished third place with $690 worth of sales. So unfortunately, they were unable to join us today, but we're very happy to have Marlene here to talk a little bit about her experience, what she learned, and just tell the group what you thought about the event. So Marlene, go ahead and unmute yourself, and thanks for joining us today.
Yeah, congratulations. So what did you sell? Let's start with what are you an expert in and what did you sell?
Okay, well, I am an expert at age reversal. And actually reversal makeovers, they're all natural, virtual, completely done for you. And they lower biological age a decade or more in 90 days or less.
Cool.
Yes. So, I'm a master quantum health activator. And as a result of my makeovers, people get help for issues such as lack of sleep, energy, aches and pains, hair loss, arthritis, brain fog, you name it. I've probably heard it. But it's a, clients find relief and they actually experience really amazing permanent results with me and step into their purpose and potential and lead their lives and businesses in ways
And
that
so what was your specific offer and price, just for the learning of the room? And again, those of you, as we wrap up, and again, Scott, again, thank you for being on. I'm going to revert back. One thing I just remembered is critical. If you have entities and they are not corporately compliant, also a reason to get an appointment with Scott.
Yeah.
Critical. So as he hangs out and we continue to wrap that conversation, Marlene, are you incorporated, by the way, in this health conversation?
Yes, I've been an escort.
I was going to get you a sale right there, Scott. Get that pick.
Escort for 10 years.
we want to really showcase, like, we're coming into, we've really, I'd say, updated and enhanced our marketplace. And that was part of our last virtual. Now we're calling it the Millionaire Maker Meetup at Marketplace, much more intimate, smaller groups, with our goal of making a lot more money. But talk through, because some of this is, obviously market you and congratulate you, but also what did you like? What did you sell? What was the price? And then I want to get to some learning. So those that are watching and thinking, should I go to this thing?
Yeah.
Say, yes, you should go to this thing. $3,200, like, awesome.
I didn't have a $20 thing before this last weekend.
Good.
Yeah, I set up a $20 thing and a sales page, and it was to get a reading, essentially, for me, so I can read how much your body is your full body physical hydration. So I read people, and then besides that, I would read what their 10 top organs and glands, the percentage of function that they're currently functioning at. So
is it a test that you take?
Nope, I just read people. I can read.
All right, you're intuitive. Got it.
So I provide a reading for them, and it was a nice report. Showed where they're at, showed suggestions. It also gave a how to drink water and be fully hydrated. It was a nice report, for people as well. So that's what I sold for $20, and I found I've probably got let's just say 50% closed ratio. So
and then what did you sell after that? So
upsells.
how many people bought the $20, and then how many people bought the next thing? And those of you listening, if you haven't really figured this out, your funnel is what drives your revenue. And we teach it from driving a monetary, not what it is, essentially. So, I mean, it's interesting what it is, but I can tell you, if that $20 report Marlene didn't sell, you'd find something else for $20 to sell, right? Some other thing, maybe to sleep. And maybe, I mean, honestly, with all the things you've said, you could probably have 10 $20 reports, right? And then from there, where do you feed them? What's the next thing in your funnel that you feed them from that initial?
Okay, so that's where I gave them recommendations in the report, depending on what I found,
yep.
Areas of, compromise. So that's what my suggestion was. And then I would provide them a link with that particular order form that they can go to and purchase that from me. So that's, I did 7 of the $20 sales. And of that, then I got, well, I don't even know, I guess a few orders of upsells from that. So $600 was one of the upsells, and I won't mention names, but there were people who had compromised, kidneys, for example. Okay, so working on someone's kidneys right now, and then there was bladder, there was gallbladder, lungs, and there was a few different areas, right? Physically, I work in the physical, but I also work in the mental and the emotional and so forth, energetic. And when you talk about entities, that means something else to me. I clear those, but so then and I also took it off offline because I had some other people that I could pitch this to. So that's what I did.
Good.
I just thought, well, I've got some other calls to make. I might as well just tell them about it too. So I did. And that's how I got the number to go up over the weekend.
Good.
And are you going to continue to use this as an offer?
I guess I could. I don't do a whole lot of cold calling because I don't really have to where I'm at in my business, the way I get my leads. But I'm thinking that now I have to, because I've trained other people to do what I do. And so I'm going to be feeding them leads. So yeah, it might be something that I'm going to require now to have to feed these other people business. So yeah. A great exercise. I think the beauty of this is that it's the momentum that builds. Okay, so like when you first signed up, when I first registered and said yes, of course, well, as soon as you say yes, then you're totally hooked up and the ride starts. I noticed with Laurel, it's amazing. I think you've got plenty to do. You've got like, you can't say, well, I'll just wait until Tuesday. So yeah, and the gap analysis, setting your freedom day, the goals,
Yep.
it's really amazing to see, where you are, what you actually have. I was amazed to see all more assets than I really figured I had. And then, but where you want to be. And that's the kind of thing too, is like, okay, so where do I want to be? I know how to, go, but what if I don't want to go all the time throughout, the till my freedom day? What is that going to look like? So that's where I have the luxury of having trained in people to do certain things for me, so that now I can have others, on another stream of revenue, I guess, if you will, too. And,
Yep.
Passive, I guess, as much passive as you can get.
Well, so I'm going to stay on the event, then I'm going to come back to your Freedom Day. So what else did you learn? So obviously it increased your momentum, increased the pace. You have a $20 item. What else did you learn? So, and again, I'm just kind of speaking to those that might be sitting on the fence saying, is this really real? Are you really going to make money? And I mean, speak a little to the learning in that experience.
Okay. Yeah. Good question. The people that I talk to in the marketplace, there's of course people who don't know what I'm talking about, but then I ask them, what was part of the ask, tell, ask. So what I learned is the ask, tell, ask, and getting that dialed in, right? Because that wasn't exactly where I wanted it. I figured out after the first call, like, okay, did some tweaking. I tweaked the sales page a little. I tweaked my offer a little bit, and then I tweaked the ATA again. And so it's getting them to talk about their issues and what they want to see for themselves. Are they, happy about the current rate of aging, or whatever it is that they're experiencing on a recurring basis? Yeah. So going through the ATA and getting that down, I think was the most important to me, because I'm so close to what I do. Sometimes it's hard for me to explain what I do to other people. So just having something canned, ready to go, you just grab it out when someone asks a question is ideal.
Awesome. Yeah. So when you look at your Freedom Day, if you could just pick a number, what is it?
A dollar amount. It's, and that's the thing is, is that all my assets, or is that just my, I wasn't, yes, I wasn't there.
You wanted to be done, which you never done. I think you all know that. I mean, even if you say, well, I'm going to go take, my hundreds of thousands or million and I'm going to invest it, whether it's, and you saw whether it's a construction loan, or it's a marijuana project, or it's a Ford dealership, or it's the black hole, or like, if you look at that portfolio and say, how much does that need to produce me that I actually don't have to do my active business? What's that number? And those of you out there, that is really where you want to be looking, is the active business becomes the level that you want to play it at, but you have enough assets. And usually your active business its job is to produce enough income that you can get it to work for you in new assets. So, you can, give a range. Is it 10, 15,000? Is it 20,000? What's your monthly goal that you're going to be shooting for, Marlene?
Oh, the monthly goal. Okay. Well, for next year, it is, the monthly is set at 40,000
a month.
Mm-hmm.
Okay.
Yep. So it's more than that for my 1 year of freedom, but it's other things too, just like, how can I take myself out of the Monday through Friday thing more and more? So that's part of it too. So building in the pieces to send to other people now, so that in a year from now, I won't be working Mondays. Well, I'm not working Mondays and Fridays now, but I'm going to take Tuesday off too. So yeah. So I'm looking at taking more days off my calendar.
Good. Well, congratulations. And we're excited that you won, and now you can attend graduate marketplaces. So the way graduate marketplaces, because I see a lot of you that are out there, you have attended. Graduate marketplaces will now be on the Friday of the marketplace. So like this Thursday and Friday is a brand new class coming in. And we're going to be picking up the pace. Instead of doing one big one, we're going to be doing twice a month and a little smaller, more intimate. So it's on a Thursday, Friday through the weekend again and Monday. So we just rearranged a little bit of it, but to offer graduates an opportunity to keep selling and keep building a list and keep making money. Every Friday that we do one of those from 2:30 to 6:30, it's a wide open marketplace. So all of you that are out there that graduates, continue to jump out there, and look forward to seeing you out there, Marlene, and helping you keep them looking young, and I'll get them rich.
Marlene, have one last question for you. If you could tell someone what was the biggest aha moment, or what would you tell someone who hadn't taken this, has not yet done this event? What would you tell them to do for this event?
Before the event, I would say to do what Laurel sends you. You know, she sent a couple of books, you know, you could have done it, you know, yourself if you wanted to read the books, I guess. But really it is the momentum, and it's the people, and it's the people that show up and just do the work, really. And those are the people, when you talk to them, I think that's what makes the ball roll. And there's plenty of people on her calls that I found that were really helpful. Yeah, so it's the people, I think, is it.
Perfect.
Yep. Awesome. Well, congratulations, and thank you. Look forward to continuing to see you and selling your stuff. So you have a great day. And again, Renee and Jim, congratulations on your big win. I know they had a lot of people have 12 noon broadcasts on Tuesday in classes. So they were out of class as well as Sarah had her class. So it was good to see Sarah came back, though. Sarah was in the big table for a while, and she's got this amazing green food, superfood packaging that has been put together, and it's time for her to run. So it's good. So congratulations and thank you. Those of you, again, if you need corporate compliance, you need to talk about what to do, and it's now. Do not wait. I mean, get to Scott right away. We will all be heading next Saturday, the 10th. Most people are flying to Kansas. Those of you, if you haven't made your reservations, it's important. We're headed towards the top of our number, and we have a lot of communication and marketing messages going out. So once we hit our number, you're not going to be able to get there. So, and a lot of you need to be in this real estate tour. It's going to be so brilliant. We've got cross-border folks coming, international investors coming. It's going to be hot. So we're headed to Kansas on that 10th of October. The 11th, we start our tour. Make sure you call into Damon and Jordan to make sure that that's set. And again, if you have not booked and you have not gone to a marketplace, we're doing our Millionaire Maker Mastermind. Our marketplace starts at 10 o'clock a.m. Doors open around 9:30 this Thursday, October 1st. Okay, anything else, Thomas?
That is all I have for now. So Scott, thank you. Marlene, congratulations. Looking forward to seeing everyone in Kansas. And yeah, if you haven't set up that entity, do it now. Connect with Scott and get set up for the end of the year and started next year.
Awesome. Well,
Absolutely.
thank you guys. And I look forward to speaking with everyone.
Take care. Bye-bye.